What's up, everybody? My name is Octavian, and today I'm here to talk to you about how to build your credit score to that 800 peak level. Now, you may be wondering, why do you want to build your credit score so high? Well, it's going to help you in the future. If you ever plan on getting a mortgage, if you ever plan on getting a car, like getting a loan for it, you're going to need a great credit score. And it's going to be very valuable because you won't end up having to pay less in interest rates, and you won't end up saving so much more money that you can use it in other things like vacation, food, whatever expenditures you want to do. So I want to help you build that. Now, with that being said, whether you never had a credit score and you don't even know what that is, or if you had a decent credit score, you was at 750 and something happened, you default on a loan, times are hard, whatever, this video is going to help you out either way, and it's going to help you build that credit score up so then you don't have to worry about no high interest rates. You don't have to worry about not being approved for certain loans from banks, so you can't get that certain car, you can't get that certain house that you're very interested in. This is going to help you prevent all those situations, as well as save you a whole bunch of money and give you a whole bunch of nice benefits that credit cards can't provide. So, as you can see with this great graphic I found online, there are 5 components that make up your credit score, with the most prominent coming from your payment history at 35%. We'll get into how to build that and what that is a little bit later. Following payment history, you have at 30% the amounts owed. That includes car loans, student loans, mortgage, things of that nature. Bottoming off the list, you have at 15% the length of credit history, 10% types of credit, and then at another 10% new credit. We'll go one by one on each category and say how you can improve your score to improve your overall score to reach that 800. The first component is payment history. Basically, have you made your payments on time? This includes mortgage payments, car loan payments, credit card payments, student loan payments, any kinds of payments that are on a recurring basis that you have that has affected your credit. That's what this comes down to. Have you made your payments on time? First, you should check out my previous video about the 3 financial musts when you turn 18. No matter what age you are, those are still applicable financial tips that I recommend any person starting their finance or rebuilding their financial situation should do. Now, after you go and watch that video, you will understand that if you're young and you're starting to build credit, and first get that credit card. Apply for a credit card like a Discover or Capital One card. Get a secured credit card with a low deposit like $250, $500, and make that payment before it's due, before the end of the month, before its payment date. Make that payment. Do that consistently. That is going to help build your credit score super fast because, like I said, it's 35% of your total score. Start doing that. Then, following that, after 3, 4, 5 months, go and apply for another one. But that's going on into the multiple lines of credit. So we'll get into that later. But main thing is, if you haven't had a credit card, start with building that credit. If you don't have any credit history, start by trying to build it with a very good first step, and that is to make your payments on time. Now, if you are well seasoned in the financial market and you had a few setbacks, this is still applicable. Make your payments on time. If you have a car loan, make your payment on time. Take out the amount of money for the loan every month, pay it. Make sure you make that payment. Or if the car is too expensive, get rid of it. Same thing for your mortgage. If it's too expensive, maybe you need to downsize. Maybe you need to rethink some of your situation. The main thing is you have to make your payments on time in order to have your payment history regarding your credit grow. Because making your payments on time is basically the main thing that will help that help that component grow, basically. So bankruptcy, liens, things of that nature will knock down that portion of your credit score. And knowing how big it is, you don't want that knocked down. So do what you need to do and make those payments on time. So, second thing is the amount owed. This encompasses any kinds of debt that you owe on multiple different things. Now, there's good debt and bad debt. Good debt is debt at low interest rates that you are actually making money in the long term, and they don't hurt you. Good debt includes nice long 30-year mortgage that is at a really low interest rate. Another good low interest, well, possibly low interest, good piece of debt is a student loan. If it's not really increasing that much, it's better if you just pay it off slowly, make the payments consistently, and make them on time. It helps build your credit because that debt is good. Bad debt is debt with a really high interest, like carried over credit card debt, because credit card companies, they charge absurd rates like 22, 23, 25% carryover balances that you don't need to pay. You don't need to worry about that because you, being smart, are not going to do that. You are going to pay your balance before it's due on all your credit cards, and don't spend what you don't have. So that's important. Another very important part about the amount owed is your credit utilization. The key sweet spot is 30%. Do not go over 30% of your credit limit. This will end up hurting you because it's creditors, they see you as more of a financial risk when you go over this window. So you want to keep your spending on your credit cards below this window. If you have multiple, try to keep it below. And yeah, ones with higher limits, of course, you can spend more before, so then you can still be underneath that 30%, if that makes sense. This goes for people that are new to credit and are rebuilding their credit. Just make sure to stay below that 30% range, and to make sure to make your payments on time, and to make sure that any debt that you do have is good debt. That is the only debt that's going to help you in the future and help you build your credit for the long term. If you like the content that's being provided in this video, make sure to like, comment, subscribe. There's plenty of more content on this channel that you should be able to enjoy. Now, with that out of the way, let's continue on with the list. The third thing, which is the easiest to build and also the most time consuming, is the length of credit history. It makes up 15% of your score. For people that are building credit, open up a credit card and make sure the credit card has no annual fee. Why? It's a free credit card. It's free credit, so it doesn't charge you anything to own that credit card. Make your payments in full at the end of every month and keep it open for the rest of your life. This credit card will just help you build your credit because it's open. That's literally it. Just have the credit card and let it sit there. You don't have to use it after a certain amount of time. Just let it sit there because it just increases the length of credit history and it's going to boost your score. For people that are rebuilding credit, you likely already have a credit card, but if you do not, follow the steps with people that are building credit cards. But if you already have those credit cards, make sure that you have no annual fee on those credit cards and keep those open for as long as possible. It'll be very beneficial for you in the future. And currently, they're already helping you build your credit score. Also, if you have low interest debt, like student loans and mortgage and a 30-year mortgage, continuously pay those and pay those down and make sure to make your payments on time. Those are beneficial as well because they also show parts on your length of your credit history. Number 4 are types of credit. These include but are not limited to card loans, business loans, student loans, credit cards, retail cards, mortgages, things of that nature. Having a variety of those will build your credit, and they have an impact on your score. So if you're building credit, get a credit card, preferably with no annual fee. Make your payments on time in full so you don't incur any debt. And do that for every 4 months and apply for a new card with no annual fee and do the same thing. This will help give you multiple lines of credit and give you a range. Of course, you can build up if you want to get a car after you start. Maybe you get a salary, maybe you get a first actual job, want to get a car, get a car loan at a low interest rate, and that will also be added for people that are rebuilding your credit. If you already have multiple types of credit, make sure to make your payments on time and make sure that you can afford those, because you don't want to be paying crazy high interest rates or not being able to afford and having to sacrifice certain things just in order to make it month to month, week to week. So make sure to try to decrease the amount of expenditures and make sure to have the adequate amount of money in order to be able to fund your mortgage and your car payments and your insurance fees. Make sure you're able to afford those things. Number 5 is new credit. This includes how much of the credit that you have acquired is new. This usually is about 3 months when determining your score. So if you're building your credit, this is why I recommend applying for a credit card between 3 and 4 months, because then that impact of having a new credit line will actually be made up when you already have had 3 to 4 months to build that credit, if that makes sense. So when you apply for a credit card, your credit score will take a hit. It's a small hit typically. When you're newer into the credit game, it may be a little bit bigger just because you're newer. So it may go down maybe 10 points, right? But you're going to make that back up by making your payments on time and not incurring any interest. After that 3 to 4 month window, you usually should be back up to where you originally were. And as you open up more lines of credit, as your length of credit increases, that hit is going to be smaller and smaller. Next time you have that, your hit may be 5 points. Next time it may be 3 points, something along those lines. It won't be as hard as it was before the first time. Regarding people that are rebuilding credit, it's the same thing. It's going to have the same impact on you. You typically, instead of starting from getting hit with that 10, you likely already will have that credit history. So that impact may be initially like a 7. You may go down 7 points or 5 points, something along that nature. And you'll just be able to go back up from there as long as you make your payments on time and don't incur any interest. So yeah, that's pretty much the video. These are all factors that are implemented in calculating your credit score. These are the ways that you can improve it. And this is the ways that you can get that 800 desired score that you know that you can achieve, and I know that you can achieve, simply just by following the tips that's in this video. Thank you for watching. If you like the content, make sure to like, comment, and subscribe down below. I will be posting more videos very soon. I plan on posting Thursday and Sunday every week. Come into the channel, check it out. You'll love it. Make sure to leave a comment about types of videos that you want to see, because that will help me know what you want to see. So thank you for watching. I'll catch y'all. I'm out.